Joining us this morning is Jeremiah Buckley, portfolio manager at Janus. Henderson. Top holdings include NVIDIA, Microsoft, Alphabet, Apple, and Amazon. Jeremiah, it's great to see you. I wonder what you make of our conversation, given the such strong headwinds and tailwinds, technology versus the macro we were just discussing.
Yeah, good morning, Carl. Yeah, we're still optimistic on the market. If we look at, the S&P 500 up 16% so far this year, but earnings are up 13%. I think we've seen more industries participate in that earnings growth. Certainly AI infrastructure has had substantial growth, very impressive growth throughout the year. But we're seeing other sectors like commercial aerospace, travel, credit card companies, capital markets. And so we've seen a broadening out of that contribution to the earnings growth. And so we're still positive. I know we've been talking about the labor market and we're concerned about the labor market, but if you look at from a consolidated basis, a lot of the consumer spending data remains quite strong. We spent a lot of time with Visa and MasterCard on their reports, and they continue to see consistent trends. Yesterday we got Costco reporting 6.6% U.S. comps, and so that's just another indication that consumer spending is still strong. If you look at credit card
let me stop you
trends,
there, because the trend line on Costco is not great. Ever since the summer, if you say go from June on, the trend line is decidedly negative. A great chart that I saw recently is MasterCard relative to American Express, which is obviously more of a premium name. That relative strength has completely dissipated since the middle of the year. Isn't that a comment on spending?
Yeah, so certainly American Express has had very strong results as well, both through internal initiatives, but also the nature of their customer. And again, going back to the travel strength that they see, they're a little bit more exposed to travel as opposed to MasterCard, which is certainly broader on consumer spending. And so I think that's more of a function of the internal companies and the multiples as opposed to the overall trends. But I think both companies are seeing really healthy spending trends and fundamental growth.
Where are you on the AI spend? We today mentioned once again 5-year CDS on Oracle and the ability of these hyperscalers to continue to fund some of this investment.
Yeah, so we're still positive. I think the commentary around demand coming out of earnings continues to be very strong. We had AMD report yesterday, also strong GPU sales and a strong outlook going forward. And so we think that the demand is there. We think, obviously a lot of this CapEx is being funded by cash flow from the hyperscalers, which, is certainly a healthy part of the market. But we're also seeing some of these companies like Oracle come to the bond market, and those bonds being generally well accepted. And so we think that the funding for this capital investment continues to be on track. And what's impressive to us is the number of use cases for AI continues to expand. And I think we're actually seeing it in corporate earnings. You've seen margins continue to expand across a number of different companies and industries. And I think that's attributed to the productivity that companies are seeing in their operating expenses, partly attributable to AI.
Interesting. You already think that's showing, because there is a debate about that, Jeremiah, in terms of whether we're really seeing it used in the enterprise, widely to the point where it is having that impact. But you say yes.
I think so. I think we've seen it in some of the largest companies. So certainly it takes a lot of capital and R&D to invest in AI and participate in the benefits of AI. And so the largest companies, like a JP Morgan or some of these very large companies that have those budgets, they're seeing the benefits in their operating expenses. The number of use cases continues to grow. And so I think we're seeing it. I still think it's early days. I think we have years of this productivity acceleration that will continue to contribute to earnings growth going forward.
Jeremiah, didn't get to tariffs or SCOTUS or the Fed, but we'll save that for next time. Good to see you. Thanks for the help as always.
Sounds good. Thank you.
Jeremiah.